This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now here on Market Talk as we take a look at the trade action we saw on Monday to start the new week, a busy week ahead, a lot of different events in front of us. Joining us today, our good friend John Heinberg with Total Farm Marketing. John, good to catch up with you, sir. Hope you had a good weekend.
Yeah, a solid weekend here, except for the Packers, unfortunately. But, another nice weekend, at least in terms of weather. But it sounds like that's coming to an end pretty soon here.
I got to think a lot of fans in the NFC North of teams such as the Vikings, Bears, and Lions are happy the Packers are faltering. But I share your pain being a Packers fan myself as well. So we both can agree on that. John,
feels like I'm back in the 80s.
Exactly.
All right, back to work. Here we go.
Yeah, back to work. John, market trade Monday. At least grains and oilseeds, we had a little buying strength in wheat there, but we kind of faded that towards the end of the session. Corn just kind of chopping around the bottom of its range. Beans gave back a little bit of last week's premium. Overall, though, it didn't feel like a whole lot of market news to really move things on the day Monday, but we do have plenty of different events coming up here this week that I think traders are prepping for.
Yeah, probably the biggest news we saw over the weekend was basically the talk about the COVID zero policy in China. That was a little bit of the buying strength at the end of the week last week. And basically they kind of refuted those policy issues this weekend. And that may have brought some of the selling in last night. That just continued over. I think there's a lot of things happening here too. Let's just look at the outside picture at this time frame. Big election tomorrow. The market might be squaring itself up before that, just in case we get some results that the market does not like or gets results the market does like. So we'll see, how the market has to handle that. Obviously, WASD report here on Wednesday. We'll see what we get for adjustments on the demand side of the equation there as well. Plus, like I said, we just ended a little bit soft on Friday. Charts were a little bit weak, especially in corn. And we continue to see that drift lower here, as we're still concerned strongly about the demand side of the equation as we looked at those corn export inspection numbers today. And they're pretty dismal concerning where we are in terms of 5-year averages.
Well, John, you mentioned this to me before we jumped on the air. It feels like outside of the different factors and the news out there, these markets just feel very seasonal all around here as we're wrapping up harvest, John.
Very much so. That's been kind of a trend all year. You go look at where the seasonal peaks and valleys are. This market seems to have followed that. That's probably the algo traders plugging that right into the system as well. So if that is the case, we got the opportunity here to we look at a seasonal window to buy corn and beans coming up here relatively soon, but we may have to get through the report and the report's reaction first. So we'll have to watch that. Still the biggest thing that I keep an eye on here, besides all just the mishmash and the chatter that's out there, what's the cash market doing? What are producers doing with their grain? That continues to stay relatively friendly, and I think that keeps some support of the market. But with that being said, just the move in corn today down to the 675 window. Wouldn't be surprised to see a little bit more air come out of that market just because we can. But if an end user's out there trying to get corn supplies locked in, here comes a little bit of a gift for you here.
Well, I'm thinking about this market as well, that corn market especially. We've just been so range bound as of late. All through harvest, you mentioned the cash market has been relatively firm. And I think now as farmers are wrapping up harvest, they got to take a look here. I've heard it's all over the board. I've heard a lot of sales. I've heard some sales, and I've heard no sales from some farmers. So I think they got to take a look here at 675 on the board, and depending on what their basis is, and really think about making some moves here as we get deeper into the winter months and head towards a new year, John.
Very much so. You got good value. Obviously, though, short crop usually means you store it, try to take advantage of future prices later because of the supplies being a little less fresh than we have now. And if you're doing that, though, you got a lot of variability out there that could make you concerned where the downside is. So you make sure you protect those values. if you're going to take on that storage risk. But again, you do have some value in front of you here. Go ahead and get those sales put in. If you want to stay in the market, go out and pick up a call or call spread over top just to keep some upside in. Those are still a better floor than buying a put, is selling the corn at 675 on the board and not having that cost of the put underneath. So there's just a lot of different thoughts. It's going to come down to what each farmer needs in that regard, in terms of what their supplies are, what their money situation is too. And you hear a lot of chatter about the tax implications of things right now. So that may be keeping some push off on some of these sales. But at the same time, again, there is still great value here. And the news headlines still are a very concerning point of this market every single day, and how quickly we see things move. Just look what happened in the wheat market last week.
Very, very true. Well, and I wonder too, with the corn market, does it feel to you like the corn market's a little more tied to the wheat market right now and the headlines versus soybeans, which have some of its own headlines to watch here? It feels like corn's tied to wheat more than soybeans right now.
At this point, very much so. It just seems like wheat seems to be a driver in the corn price. Corn futures are fairly, firm early. Never really got rolling into positive territory today, but at least challenged it. That was when wheat was up 10, 12, 13. And as you said, wheat futures faded towards the end of the day. That seemed to drag the corn market right back down with us. The buyers just walked away. So again, those two are tied together pretty closely, at least in terms of price movement. It seems like corn would like to take off, but wheat just doesn't want to let it go. And it feels like when wheat wants to fall apart, it seems like it anchors corn right with it. So those two, at least from that standpoint, are slightly tied together.
Well, and with soybeans, you brought up China, and I know that's a big concern in this soy market. Still good demand for renewable diesel out there, and just products in general. Meal crush margins are good. It really, meal and oil didn't have a bad day on Monday, even with the double-digit losses across that soybean complex. So I think part of that story there, really watching what happens with these product markets the next couple of weeks, John.
I agree in that regard. Soybean meal right now is going to be that product. That might be the one we need to keep an eye on a little bit more than the oil here, in terms of where we are. Look at soybean stockpiles, soybean meal stockpiles in China. They're getting extremely small. You got some concerns in Argentina. Weather's not perfect. It's not horrible, at least overall. They haven't made any adjustments on that bean crop, but they did move a lot of beans in terms of their cash market, and the physical bean sales, when they went to that peso reduction, to kind of fire up some of those export numbers. So maybe they don't have the product they need out there for that global export market. So that might be the market we watch right now. Has been that soybean meal. Meal-led rallies usually have a little bit of leg to them in terms of the soybean market versus an oil rally. But oil's had a heck of a run recently. Obviously the biodiesel component in there, the price of crude oil moving the way it has recently, has helped provide some pretty good support. So today really wasn't a bad day in the bean market. We've had a heck of a move and drop back 10, 11, 12 cents, on a Monday after a fairly negative news article in terms of that COVID situation in China. I don't consider that to be a bad day. Still like where the upside is at on this bean market. Now we just may have to chop a little wood here until we get through that USDA report and don't get any major surprises, even though we are expecting the export side of it to get reduced and bring up that bushel count just a little bit on the carryout.
I was just going to ask as well, heading into that report on Wednesday, what are the biggest things you're watching? You've alluded to demand. I'm watching yield for quarter beans, I think, too, just to see, does a small crop get smaller, or do some of those better than expected yield results we've heard about, do they factor in at all here, John?
Yeah, to me, the biggest side of it's going to be the demand side on this report. We'll see some probably minor adjustments on the yield. I think the market's expecting maybe a tenth of a bushel up on beans, a tenth of a bushel lower on corn. So nothing major there, which will easily be absorbed if they make some demand cuts. We're expecting carryout for both corn and beans to move about 50 million bushels higher on corn and about 15 million bushels higher on beans. Again, just probably reflective of some demand changes on the balance sheet. The thing though with beans though, export shipments, big number this week. Again, 2.58 million metric tons. Solid week last week, really strong week the week before. So we're seeing those beans move. So maybe that gives the USDA enough time to just say, let's watch this a little more before we make some more demand adjustments, because we are finding a way to get those beans out. We've peaked here. Now the key is going to be how long can we maintain good shipments? That's going to be the focus. Now on the corn front, those numbers were dismal. Just under expectation, 230,000 metric tons, just not a very good number. Yeah, it's the window we're shipping beans and not corn, but we're still well below last year's levels in terms of what we did get out. That might be tied to the river levels a little bit. It's also probably tied to the domestic demand and the prices that they're putting out there on the ethanol front. They're competing against those exporters for those bushels on a tight supply side.
John Heinberg with Total Farm Marketing is our guest today here on the show. John, midterm election Tuesday. Just your thoughts there, real quick. Do you anticipate a lot of volatility off of the elections? Not getting political or anything here. Just your thoughts in general. Do you think that the elections could have a bigger impact this year than they have in previous years, possibly in the markets?
It's hard to gauge, but again, you do have a headline driven market, and we'll see the most of that impact, and obviously in the equity markets and maybe the US dollar index and crude oil and things of that nature, which that could come into play. We'll see how that spaces over into the commodity sector. To me, grains and livestock are tied a little bit differently away from the political theater that we have out there. Obviously, if the stock market's been strong last couple of days, maybe we're anticipating a movement to the red side, which would be a little more pro business. If it doesn't, we could see some disappointment in the stock market in that regard. What's that turn into? A little bit of a risk-off mentality. We don't know. These are going to be volatile situations. I think the biggest thing the market won't like is the fact that we could be in a situation where we run into gridlock. And gridlock just gets us nowhere in policy, and again, just provides just no direction in terms of what we got for policy here in our country.
Out ahead of this too, John, we can't forget you brought up the river level situation. That's an ongoing thing, but we have the Ukraine grain deal expires on the 19th, and the same day we could potentially see a rail strike again on the table. So I know those are two issues that I think traders, once we get past the couple of things here this week, traders are really going to be zeroed in on those as we get into next week, I would think.
Yeah, very much so. We saw a little bit of movement maybe on the rail situation with some of the headlines of this morning, but still got a lot of work to do there in terms of getting that settled out. The Ukraine situation is what it is, and it'll never actually come back to where it needs to be. But obviously, we saw the volatility that brought into the market last week when we thought the deal was falling apart and Russia was stepping out, and we rallied aggressively for 2 days. So those are still things that are out there. To me right now, we kind of need to get through this window between here and Thanksgiving, get into a point where through harvest, maybe get through some of these major headline events. Then we can sit down and say, all right, what's this market need to do? Do we need to ration bushels? Do we have too much supply? Is prices too high? Then we'll even start thinking about the acre number in the spring and what could be coming at us there. So I think the next couple of weeks, again, a lot of volatility, a lot of choppiness, but maybe overall not a whole lot of direction.
John, let's talk livestock. Hogs on Monday, really strong move to the upside there. I wasn't sure what to make of it. Was it just a technical bounce, possibly? What are your thoughts with what hogs did on Monday, John?
Now we got a combination of things maybe coming into play there, but obviously buyers stepped into the market. We did clear some key moving averages. So that gave us that technical balance. We saw some short covering in that regard, or some more money flow into the hog market. But let's go back to Thursday's export sales numbers. That was a monster number, almost 49,000 tons, just a big chunk of sales. Pork values have been very, very depressed. So it's been encouraging to see maybe the bit of volume pick up there as pork retail values have been down on that side. So maybe that brought a little bit of bottom picking in this market overall. And we're still not seeing the fundamental strength. So that's something I'm watching here. We're not watching the cash market work higher. We're not watching those retail values get a lot of footing. So any rally still seems fleeting in my mind. Again, last thing we talk about seasonality. Usually from here till about Thanksgiving, livestock markets get some buying strength into them, especially those pork and beef markets, as retailers are preparing for the Christmas window, getting those products taken care of. Maybe the market's just anticipating that here too, wanting to get out a little bit ahead of that. So we'll have to see. Good move today. I like seeing those $4 moves in hogs. But again, not sure if we got the fundamentals to truly sustain that rally. So it might be a little bit more about money flow and seasonality than it truly is about fundamentals.
Well, I noticed last week too, we typically have had a day or two each week where cash has moved higher, and we didn't get that last week. So I found that very interesting in the hog market. John, cattle, you mentioned export sales last week were really good for pork, where they were terrible for beef. Yet found a little support in cattle, both live and feeder trade on the day Monday. I would have to think maybe lower corn prices help there. But as you look at this cattle market as a whole, what are your thoughts there as we work into November?
Again, it's all going to be about cash trade. You mentioned the export number. I mean, that's a nice number, but to me, that's the icing on the demand cake. Is the export side of it. Retail demand continues to be very, very good here in the United States. We're still watching the U.S. consumer, even though with the higher prices that are out there, still has a demand for quality beef. We still continue to see that in terms of the carcass values that are there. And that's led us again to higher cash trade last week, or steady to slightly higher, and still putting in a new high in the 5-state numbers for the year. And the anticipation is that's going to continue as those cattle numbers start to continue to tighten down. Throw in that little seasonality window again in terms of this owning cattle in this area between now and Thanksgiving. Maybe it was market was set to make another little move. It tried to break a little bit last week. It really didn't do it. So you come back with cash trading 52, 53, 54. The December contract was a little undervalued to match that cash market. Feeders there, obviously that was probably a reaction to the strength overall in the animal complex as well as the weakness in grains. But again, some of those feeder numbers still look a little undervalued to me compared to what producers are seeing out there on the cash front. That the feeder market may have a little bit of work to do big time, at least in terms of the longer term window compared to some of those those cash prices that producers are dealing with.
John, how about the dairy market trade? What are you seeing there as we start the week?
We put a significant low in that December contract here a few days ago. And when we pushed this down to that 1850 window, we saw cheese trade kind of tumble lower, got a little bit of a turn in cheese, a little higher again today, get back above that $2 per pound level on the blocks. Again, maybe that's some of that Christmas seasonality or holiday season seasonality coming in play. Looking on the demand front, just feels like a market that wants to come off of a significant low and get back into a bit of a trading range, probably working that 2050 window from the front end to 1950 on the bottom end. Again, for producers, keep looking to take advantage of the top end of those ranges.
All right, John, let's try to kind of rope this all back together. Obviously, a lot of seasonality, a lot of volatility in the markets. We have harvest wrapping up for many folks. So they're getting an opportunity to sit down with their pen, pencil, and take a look at things here as we go to the end of the year if they haven't made certain decisions already. So what would you say to kind of wrap this all up to our farmers, ranchers out there as they're looking at their marketing plan here the next couple of weeks ahead?
I've said this time and time again as I've been on here on these Mondays, and just the value that's still there, depending on regardless what crop or product we're looking at. $100 hogs plus in the summertime. Upper 150 cattle in the spring and the summer. Obviously, grain prices where they are at this time frame. Showing good value even out into next year. Take advantage of those prices somehow. Again, the risk for producers in these markets is to the downside. That could be driven by the economic side of the equation globally. So that's something that has me concerned here in that regard. Making sure you keep some puts underneath, know what your dollars and cents are, and say protect that level and let the market do its job to the upside. You want price flexibility to the upside here. That's still going to be the biggest key going forward, is somehow protecting your floor, but still benefit from those price moves, whether it's re-ownership strategies or putting a paper floor underneath and letting the product do the work to the upside in these markets.
Well, John, as always, great advice. And I know if farmers, ranchers, folks want to reach out to you and talk with you about things, talk about their marketing plan there at Total Farm Marketing, they could very easily get in touch with you. How can they reach you, John?
Sure, love to chat with them anytime. Give me a call, 800-334-9779. Shoot me an email, johnh@totalfarmmarketing.com. And again, don't forget about that website of ours, totalfarmmarketing.com. Love chat, just talk markets, just ask questions. Doesn't cost anything to pick up a phone call other than just a little bit of time to see what's going on.
John, always a pleasure, buddy. Enjoy the rest of your week, and we will talk to you again next week. Thanks so much.
Sounds good. Have a great week.
John Heinberg with Total Farm Marketing. That's going to do it for our show today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.